Okay, good afternoon. Welcome to the weekly take on the market. Today is Friday, May 23. It is 11:15 a.m. Pacific Standard Time. It was now or never again. Feel like I've had to say that a couple of Fridays, but it's the long weekend and I'm trying to get out of here. So it is what it is. We're going to get this done a little bit early. Markets, unless something drastic changes, and it's always a possibility with this market, all it takes is one tweet or social media post, but 98% of the week is done. So I think we're good. All right. I'll be your host. My name is Scott St. Clair, manager of the Premium Product Group here at Investor Business Daily. Please take a moment to read the disclaimer. I'm not licensed. Can't tell you what to buy, what to sell, what to hold, how many stocks to own, et cetera, et cetera. Okay, so we'll do the typical thing, market industries. I had a good idea given to me. It wasn't my idea, but I thought it was a good idea to cover ETFs rather than industry groups. And the ETFs have really exploded in the last 15, 20 years here. And I've actually gotten some good ideas from ETFs. Helps me to stay in sync with the market. And there's constantly creating these new ETFs, double levered, XYZ, triple short, ABC, or whatever it is. And it's I might not use those tools, but it's nice to see the charts and recognize strength or weakness, and then I could go buy that stock or short that stock if I wanted, et cetera. So we'll do a little bit on ETFs, stocks to watch, and then the quote of the week. So sentiment hasn't changed much. We did lose a few bears, and we gained a few bulls, which is what I would expect, but it's still not extreme. You're only you're barely 1% more bulls than bears. It typically extreme, the 1 year bullish highs 52%. You can see below in the historical average. We're barely above average. So people are just not buying into the bull market, if that's what you want to call it, the bull market. I don't really like to label it too much, but everyone else does, and so I kind of play along with that. But to me, the market's in an uptrend. I'm buying stocks. Some stocks are working. Some are working really well. There's even some a bit of speculation that's working. I don't know how long that's going to last, but I stay the course until it ends. Okay, so before we jump into ETFs, let me pull up the indexes. And I'm going to turn my camera off. And I'm going to make sure I'm sharing. Resume. Okay, so here's the NASDAQ, and I didn't catch exactly what President Trump said. I think the gist of it was about Apple and onshoring, et cetera, and maybe there was some economic news. I really don't. I don't want to spend a bunch of energy worrying about all of that because I just find it's going to trip you up. So I'll talk about a little bit. Oklo, which is the nuclear one, was jumping this morning and jumping last night, and so I wasn't really worried about what the Nasdaq was going to do. I was more concerned with how I was going to handle that stock. I knew I would probably do some selling, and it's like, how do I sell this? Do I want to piece it out? Do I want to sell some in the after hours? So I wasn't the least bit concerned with what the indexes were doing. But as we sit here today, it looks to me like a constructive day. The market's building like a little handle. It's actually very constructive action. And the relative strength is not terrible. So I think if this was the only thing that I could trade, the indexes, I think I would trade this from the long side. You have kind of a natural line in the sand at the 200-day. a little bit lower. You've got the 50-day turning up. And so I mean, if I was stuck with the indexes, I just don't see a whole lot wrong with this. I really, right or wrong, I really think the market's going to make a new high and create a bunch of bullishness. And then I probably will become more concerned if that were to happen, especially if it does this where it goes up and then comes back in. But I don't have to guess what's going to happen. I'm just going to play it day by day. And I just don't see a whole lot wrong with the market today. So same thing kind of with the S&P. It's come in for 4 days in a row. And so far today, we still have a couple more hours, but you've gotten a support on the indexes. So you've got Bitcoin made a new high yesterday and giving back a little bit. And you've got like Ethereum, which is a little bit, I would say, probably more speculative. But look at the move, 15 to 22-ish or so. It's made a big move off the lows. So the animal spirits is the best phrase that I can think of when it comes to this. Are out there, and I like to see that. I like to see when whether it's institutions or whether it's retail. People will tell you when retail is speculating, that's the opposite as a contrarian. I get that, but I like to see the animal spirits because that they'll push up some of the stocks that hopefully I can identify. Gold, I really thought gold was extended, and but I don't know. This looks like a buy to me. I almost bought PHYS, which is the physical. This looks very interesting to me. It looks like it came down to the 50-day, and now it's just kind of building this. And if that was a stock that I really liked, I'd probably already be in it. So I don't know what the message is with gold. I know like the bond yields in Japan are skyrocketing. I saw a chart on bond yields in Japan. I almost screenshotted it for this video, and then I just thought, what do I know about bond yields in Japan? But I'm always like kind of thinking like what's big money thinking, and big money is institutions, pensions, sovereign wealth funds. What are they thinking, and where are they trying to position themselves? And I wonder if maybe that the whole fiscal thing in the world is why gold is acting so well. So that's, if you have to have a why, that could be the why. And it's always nice to have a narrative, a reason. It gives you the courage to have some conviction in the trade. There's probably one of my weaknesses, or definitely one of my weaknesses, is conviction. Staying the course of something that's working. I am easily, knocked out of the box by the price action. So I've gotten better at that in the last few years. I had a lot of conviction on the nuclear trade. So when it was going, I was always trying to get a piece of that trade, and it's paid off. Not as well as maybe if I just been a buy and hold guy, but I'm not going to. I just don't have the stomach for that. So I'm okay with that. Gold. So then, what about like world markets? So like Germany. I think there was some news. Oh, I did see some news about European tariffs, because somebody was saying the European markets were down. So like here's Germany, not much wrong there, and that ETF that I owned, AVDS, acting great. I don't own it anymore just because I needed the liquidity for stocks that I felt would move faster, and names that I really like. So, but doing nothing wrong. You can ignore this. I don't know why. I just looked at it earlier too, and it didn't have that bad spike. So it feels like the world markets are acting fine as well. That might be it as far as the indexes. Like I said, I know it's important. I don't want to ignore them, but I really spend a lot more focus on stocks that I want to own, stocks that I own, etc. They just guide me better. Okay, so ETFs. a simple thing. I'm going to show you how to find all the ETFs that are in Market Surge. This might be something that somebody would be interested in. I do this. You could build a list if you want, but if you open up the screener, let me make sure I'm sharing my screen correctly. And you click new stock screen, ETF. I've already done all of this. And I've got an ETF, I'm sorry, a screen called ETF right here. If I click open edit, this allows me to open this screen and edit it or make changes. And I've already done it, but I'm gonna start from scratch. So when you build a new screen, this is what it would look like. Brand new, you're searching for nothing, and there's 10,863 items. Everything in the database comes up. So you'll want to go into the category called general stock criteria. And the fourth item is ETF. You could do ETF and closed-end funds if you wanted, but just to keep it simple, I'm going to say ETF and I'm going to choose yes. Done. All the ETFs in our database are down below in this list panel, 4,244. And I've sorted it by percentage change current week. And you can see QBTS, the 2 times ETF, is up 124% for the week, which is totally embarrassing because I owned that coming in on Monday and still don't own it now. But it was more of, I owned the stock, I owned the ETF, and I was just kind of, pedal to the metal with the ETF trade and sold it a million points too soon. Anyways, that's how you can find some of these ideas. So you've got Ionic, you've got the Ionic Long, RGTI, this whole quantum thing. Look, the quantum thing is right there at the top. You've got the gold. Now, you cannot remove the levered ones. I wish you could, to be honest with you. So I wish I could tell it to remove anything that says 2x or 3x. So keep that in mind. But there's uranium, the bull 2 times. So you don't have to trade these ones. But if you see one that's coming up in the screen results, percentage change current week, or percentage change for the day is another way that I use that, or percentage change for the year is another way that I use that. And so I could say, oh, I can just look at QBTS, right? So it jumps out of this little mini base because it's only been public for a little bit of a while. And then it jumps again. And this is actually where I was buying it right here in the high 50s to low 60s. And so then you could say, oh, I wonder what the stock's doing. If you see something like that, and you can just pull up the stock, you can see it's coming out of the space and okay, end of story. So that's how you can find somebody. Because a lot of people have asked, well, how did you find QBTS? Well, you just find it like that, doing screens. Now, having the conviction to buy it and the position sizing and all that, that's really the most important part. That's the hardest part, really. But finding the idea is just a little bit of work on the weekends. On Sunday afternoon is best time, I think, and you're just going through these screens and finding out what's going on. So ETFs, now there's 4,000 of them. So I wouldn't look at all 4,000. It's just way too many. You could also, if you want, I could go back to this screen, open edit. And I could say, I want to make sure that the ETF trades at least 250,000 shares a day or something like that. So I put 250 in there, and now I'm down to 835 ETFs. So you could do it that way, or market cap, or any which way that you want to try to make it more tolerable or palatable, I guess would be a better word, unable to go through all of them. Or a lot of times what I'm doing, I'm going through, and then I just, at some point, I can just kind of see that it's not all that exciting, that the list is deteriorating a little bit, so to speak, and I just stop. So no, I'm not going to go through all 800 as well. All right, so hopefully that gives you guys a little bit of information on how to find ETFs and how to stay in sync with the market. I think this is a really good way to stay in sync with the market, to capture themes, to see where the money is flowing. Quantum, gold, what else? Oh, uranium. What else is in here? Bitcoin, Physical platinum, the Sprott physical platinum. See, I don't know if I've ever seen this one, SPPP. So then I would just click on it, pull it up. I definitely look at the weekly. I would definitely even look at the monthly. So like it's gone nowhere forever, right? So if there's some kind of move in commodities, who knows? Maybe this could go from 10 to 14, or I don't know. I'm just kind of talking out loud. So I like to look at that type of stuff because I think there's it's very good to find where the money is flowing, like from an industry group standpoint, from a sector standpoint, from a macro broad place. Oh, look at how about bonds? Bonds have been getting killed, right? So here's the triple inverse bond ETF. Probably wouldn't buy this, but breaking out of a base. So it looks like yields are, if this is breaking out of a base, it looks like yields possibly going higher. And so you kind of can help you to build your mosaic of what you think about the market. All right. So let's go to stocks to watch. Let's start with the leaders. Charles Harris was on a podcast, and he talked about Netflix being the first one to break out, and it's been a really good one. It's up 20% in 25 days. That might not seem like a lot, but that's quite a bit for a stock like Netflix. You can sleep at night with Netflix, big liquid institutional sponsorship, and it moved 20% in 25 days. I mean, that's pretty good. That's better than pretty good. Hood, I know it doesn't see this as a double bottom because it's too deep, but to me, this is a double bottom with a handle. It should have been bought there or there. I don't know why I don't own this one because I've talked about it 100 times. It's kind of weird that I don't own it, but the quarterly earnings are really good. HIMS, a little tougher. This pattern is not as good. And now you're getting some kind of cup with handle. The reason the pattern doesn't see this 73 down to 24, I'm going to guess is way too deep, right? It's got to be 50%. That's about 67%. So it's not going to show up as a cup with handle. It's just too deep. But if you wanted to think of it as a really large cup with handle, you've got here. I'm going to draw like a little trend line here, and now I've got kind of an alert on that. Palantir. So it broke out and it's not doing a whole lot since the breakout. But honestly, to me, again, the breakout was here. The buy point was 100, give or take. So it's doing fine. It's up 25%, very, very much like Netflix, although the way it got there was a lot more difficult than the way Netflix did it. So Palantir, I think, is a leader. CrowdStrike, starting to get legs a little bit. You could have even considered that a little mini pivot. So it's starting to get legs. And it's exciting to me that there's a little bit more stuff than just, the NVIDIAs and Metas of the world. CLS, this looks very good. Double bottom here to me. Buy point right there. I do own CLS. But so it doesn't look as strong double bottom wise on the weekly as it does in the daily, but look at this earnings line. Look at that. It's such a quality company. And it's when it breaks out, it can make a move. So that appeals to me. I like stocks that have the ability to move, but look, quarterly earnings and sales are really strong. So this is I do own this one. I think I did say that. A-Lab, another one that I own. Probably, second tier leadership. And it's always it's the patterns are going to be kind of based on the market almost always. So you've seen a lot of these double bottoms, quasi double bottoms, earnings and sales, sponsorship. Fidelity Contra actually increased his position last couple of quarters. So this is a position for me as well. What else is there? Let me look across my screen. I guess we got to look at the big boys for sure. So you've got Tesla. I don't know. Looks fine. Nothing to see there as far as negative. Nvidia looks fine. What else? Microsoft. I mean, Apple had bad news allegedly this morning, so I mean, it's getting hit a little bit. I think Apple's kind of a laggard, but um, doesn't look terrible. What about Google? It's been a bit of a laggard too, but holding up a little bit better. And Amazon, last but not least, Amazon. Building a cup with handle. Oh, Meta, I didn't do that. I think that's building a cup with handle too. Yeah. So I've got the trend line drawn. Will I buy this if it breaks out? I don't know. It just depends on where I'm positioned in other names and stuff. But I would like to see it break out, confirmation in the market. Um, and then, on the speculative side, there's lots, gosh, NBIS, double bottom. I like the support day so far today. The earnings are out of the way. You might say the lack thereof. I can live with that. But this is more of a theme play on the whole AI thing. Oklo. So I did some selling of it today, and so far every sell I've done has been a bad sell. So it just gets you to slow down a little bit. So I have very little position, unfortunately, at this point. But it was I applaud people that can hold on to stocks that are up 25% on the day, and do the math. If you have a 10% of your account in there and it's up 25% on the day, barring all the other stocks you own, your whole account is up 2.5% on the day. That's a lot. When I see that number, it's hard not to resist to want to take that. So, um, fortunately, it works out for me. Unfortunately, I get some really bad sells when I do that, and we'll see how this one plays out. But acting really strong. See CCJ and this whole area. This is breaking out day one. Uranium is the ETF. I feel like there might be one other one in that area, but so there's stuff that's moving. There's animal spirits. QBTS, quantum computing. They announced a new product, 15 to 20 almost. To me, it broke out, around 11 or so, but but holding the gains, which is really the 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 signal that I need to see. They're not giving into these big moves just yet. They start giving into the big moves, then I get nervous. Like CoreWeave, for example. So this looks incredibly extended, 60 to 100 and something, and then you get a reversal day yesterday. And to me, that's a sign that you should run for the hills. And today, although it did open lower, it's actually up. So that's action that I wouldn't expect. I would have expected them to get it at least the second day, and they couldn't. So that's feedback from the market that the market is strong. Oh, and gold stocks. I don't know what to make of gold stocks, but AEM looks very strong. Breaks down through the 50-day and then comes right back. That's usually a really good sign of leadership. That looks pretty good. And I don't own AEM, but I do own a couple of gold stocks. Orla, so same thing, breaks down and then comes through. And the reason I owned Orla is this: Contra has a big position, and look, he doubled his position. Now it's not going to change the world for him, but that I like that type of doubling of the position. And then the other one that he owns is BTG, another small gold stock, Fidelity Contra. So that's an area that's you could be speculating in as well. It's hard to know with gold stocks, admittedly, but the price action and the sponsorship, and a lot of them have quarterly earnings and sales across the bottom because of the big move that gold's made. I think that would do it as far as stocks. I'm trying to see if there's anything else that I might have missed. I guess there's coin and MSTR, which are more related to Bitcoin and MSTR, kind of an unusual day. I know Bitcoin's down, but this one's acting a little bit worse. It's down almost 5%. So for whatever that's worth. Carvana. So these are stocks to me. If the market gets in trouble, they break out these really deep bases. They should break down. I'm not saying exactly that bad, but they should start to go down and break down. And that will be a good tell for the market if that happens. So I watch Carvana for that. I watch Duolingo. Same thing. Should come back down. Should break down if the market's kind of going to give up the ghost and not continue. What there? I feel like there's another one. Duolingo, Carvana. That I watch for that kind of same feedback. UPST is something, although it's more broken. Like this would be one that I would go to as far as shorting if I was interested. Chinese stocks. Futu looks interesting to me. Building a cup with handle. It's kind of a weird, look at this base. You don't see that too often. Kind of really two big 40% cups. So that's kind of an unusual base, but quarterly earnings and sales are really strong. It's here. You've got earnings coming out. It's China. I do not own it. I don't know if I will or not, but I watch it. And Baba, I don't own it. I watch it. At least now you've got a pattern. So if you're interested in that, you've got kind of a buy point. And I've been back and forth on China. So as far as whether I'll trade China or not, so we'll see. We'll see how I'll handle this one. I am going to leave it at that. That was enough. That was a lot of stocks, which is good. There's stuff, and if you need to own 5, 6, 10 stocks, well, look around. I think I probably mentioned 20 of them. You don't have to own all 20, but you can find 5 or 6 in that sort of field of universe of stocks that I mentioned. Okay, the quote of the week. I saw Ken Griffin gave an interview. I saw it on Twitter. So I'm not sure where he gave the interview, but I really liked what he said. I think the legendary investors really know when they have an advantage and they press it. That is true. This is like baseball. You only got to be right 3 or 4 times out of 10. As long as one time out of those 3 or 4 times you get it right, you get a home run. And maybe you just get lucky and get a home run because Donald Trump tweeted about nuclear energy. So what? Why aren't we allowed to get lucky to the upside? We get unlucky to the downside sometimes, right? I've been in stocks that you didn't think they were going to announce earnings and they pre-announce 5 weeks early or whatever, and you get hit hard on those. So there's good luck and bad luck. And so, but I think you kind of, the way I saw the action in Oklo, it looked to me like big money expected something like this, and the way the stock was acting. So you kind of make your own luck, I honestly believe. So when you see something like, you got to press it. You got to be willing to take the chance and press it. They're confident in their convictions. Mostly I am. Sometimes I lose my convictions pretty easily, but I try, as long as it's not hurting me, I try to stay with them and stay confident in my convictions in there. But when I'm wrong, I move on. Why is that so important? My best stock pickers, he's talking about his team, they're right about 54% of the time in alpha terms. If you got 54% on your test here at Stanford, he must have been speaking to the student body at Stanford, you'd be gone. If you were a cardiac surgeon and 54% of your patients lived through surgery, you have a pretty short career. The amount of mental fortitude to do a job and to do it well when your best people are right 54%, it's actually pretty remarkable in a world that has become accustomed to every test is an A. I don't know if you've seen the chart on the grade inflation at Harvard, and it's like a massive roller coaster straight up, how the number of A's that they give out. So there's it's especially in a world like at Stanford or Harvard, they probably all expect to get A's. So when you expect to get it right, in most jobs, you got to kind of get it right almost all the time. Like pretty much any job, you got to get it right almost all the time. If you get it wrong, you can redo it. But if you're getting it wrong half the time, you're gonna have a hard time. And I'm besides being a professional baseball player, I'm hard pressed to find a job where you can be wrong half the time and be really good at that job. Besides finance, I guess, and professional baseball. So finance is very different. Market has a grading system, and the market is not on a curve. Excuse me. So the moral of the story is you don't have to be right all that often. You got to get comfortable with being wrong. You have to be willing to put the trade on and be wrong, and then maybe put it on again and be wrong, and then put it on again. And that third time you get it right. And the reality is, most of the time, if I put a trade on, I kind of hope it goes bad immediately, because then I haven't added to the trade. The ones I really get hurt on are the ones that go from 90 to 96 and then back to 90, because I've probably added from 90 to 96 along the way, and it didn't go up enough where I would start peeling some off. So then I would have a bigger position. I'd get hurt in those ones. Those are the ones that really hurt me. If it goes from 90 to 110 back to 90, that's not going to hurt me, because I'm going to get out at least of some at 110 and probably the rest at 100 and some more at 98 or something like that. And overall, I'll do pretty good in the trade. But it's the ones that go up just enough to get me in, and then they turn. Those are the ones that get you the worst. So it's okay if you get them wrong. You don't have to be. It's amazing to me that they're only right 54% of the time. I would have guessed that Ken Griffin at Citadel, you have to think about the quality of the candidates, the pool of people of kids. I use the word kids that he's hiring, and they're only getting it right 54% of the time is pretty remarkable, the amount of money that they've generated through the years doing so. So, all right. Well, have a great long weekend. I hope everybody does something fun on Monday. I'm going to try to do so. And the following Thursday, a week from yesterday, we have Arnie and Harold will do their weekly Stay in Step with the Market video. So I will have next Friday off, and I will see you guys in a couple of weeks. 800-831-2525 or marketsurge@investors.com if you need to get a hold of us. Thanks a lot. Have a great weekend. Bye-bye.